Most of you will miss the great last wealth transfer of your life. Not because you're lazy, not because you're dumb, and not because you don't understand how the system works. Tomorrow, the Federal Reserve makes a decision on interest rates, liquidity, and that one move decides whether trillions of dollars literally flow into your pocket or out of it. Wealth doesn't vanish, it transfers, and the Fed decides who gets it. So if you're not paying attention, this is the time to tune in. This is the Ascended podcast, where we strip away illusions, where we expose the systems, and more importantly, we give you the hidden curriculum that you were never supposed to hear. I'm your host, Caleb Schilke.
My name is Anthony Parra.
Let's start tonight's breakdown. Tonight's episode isn't just going to be theory. It's not just motivation either, if that's what you're looking for. I want you guys to put aside distractions as if you were entering the war room with us. This is going to be motion, high speed, and it's going to be a lot of information thrown at you that if you aren't paying attention, might just slip by. But if you are, it might create massive opportunity in your life on the things that may or may not exist in the future in terms of potential. So by the end of this, you'll understand why communities like Altura aren't just meme groups, right? Or these NFT projects, not another Bored Ape Yacht Club or Pudgy Penguin, but the only project that's mathematically positioned to dominate the coming cycle. So first, I'm going to explain to you a few points. As you guys know, I like to make bold claims on the podcast, and I like to back it up. So here's what you need to get through your skull. Tonight's main claim I'm going to make is that the Fed is not just a central bank. It's essentially a casino owner. And I'm going to show you exactly how that works. You guys and myself, we're retail players. Hedge funds are the big players, the high cap room. And the Fed, they set the odds, they charge the table, and they decide how long the casino stays open. They do it through rates and liquidity, how much money is going to flow into the market, and therefore how tight or how loose our budget is for people to go out and spend money. Right now, obviously, it's been very tight. And so it's been really hard to get loans, buy houses, therefore shooting prices up. And people have been just hoarding onto their money to try to survive. In the 1920s, the Fed loosened credit. The Roaring 20s, you guys are familiar with that. After World War I, it seemed like you couldn't lose. You could pick any stock and put your money in, and you were going to make insane returns, even like 100x your money in some cases. It was insane. The crash followed when the Fed realized that it wouldn't last forever, when we over leveraged our positions. And therefore, you guys know what followed, the Great Depression. 2008, the Fed slashed rates essentially again to zero after Lehman Brothers collapsed. If you guys have heard of them, if not, look them up. The stocks doubled in the span of 5 years. And most importantly, what I've referenced is March of 2020, which has come up on other podcasts, where we had the pandemic. The Fed injected 3.3 trillion in 4 months. Stocks exploded. Bitcoin ran 14x. NFTs went from obscurity to about $40 billion in volume. It wasn't just luck. It wasn't memes. It was actual straight liquidity. People could sell this, get real cash because cash was flowing. You could use that for whatever you want. It felt like the American dream was coming true. NFTs don't die though. Liquidity does. Tomorrow, Jerome Powell, the chair of the Fed, speaks. He's been here since COVID. If rates pivot down, meaning it gets cheaper to borrow money, more people can go out and get loans and start businesses and do the things they want because more money is available and banks aren't holding on to it as tightly. Liquidity comes back, the risk flows, and every risk asset from stocks to Bitcoins to NFTs like we have gets a second wind. So the first question, as you guys know, we kind of open this up for a conversation and we go back and forth. And Anthony, I want to hear your thoughts on what I just said. Hopefully that was a good enough intro, but let me throw this to you. Why do you think most people ignore the Fed and what they're doing in general, first of all?
I'll tell you why I've ignored the Fed up until recent years in my life. And that's just because I didn't know what their role was. I didn't know why they existed. I didn't know what they did and how it affects my everyday personal life. I think it's a really common opinion. To think of things to do with politics, to do with what the Fed does, to do with these larger entities, names, corporations, groups, organizations as independent almost, when the reality is that decisions they make, whether or not we had any say in their making, does affect largely how we live day to day. We just don't see it as a direct correlation. Like we don't see it as soon as they say something or sign something or state something that our lives change. But it does change whether or not you see that. Like if you have the ability to see what their decision impacted directly, if that makes sense. It does change your life. You just can't really see it. And so I think that's why people don't pay attention.
I really do think that's the case. I mean, we both had business management degrees from the Air Force Academy and a pretty prestigious, education, it was still difficult for us to understand that. Like, and again, we took finance too, where we were pricing options and all those technical things. And that was still a very difficult concepts to grasp. I would recommend most of you read the book, The Lords of Easy Money. It's very, very interesting in understanding the different types of perspectives that exist on the Fed, because the Fed is a board of central banks, essentially, that control the money supply. Think of it like driving a car, right? If you're not pumping money, pressing the gas and printing money, then the economy's not moving, right? People aren't transacting with one another. They're not giving out loans. And so it turns into a very like scarce market. Opportunity doesn't exist, which can slow down jobs. It can impact basically a million different things. And then when we raise interest rates, it's us saying, hey, we've gone a little bit too far on this. We need to press the brake and then raise the rates up to make it harder to borrow money, because too much of it exists. And we need to kind of like catch up. We're going a little too fast for our speed. And that's basically the easy way for most of you who aren't familiar with it to think about. But the Fed is not necessarily tied directly to the government. It's its own agency and it's its own entity. Look up Jekyll Island and how the bankers came together to form it. It's a really interesting story. But it has a massive, massive impact, right? Because you can't play the game of finance or business unless you know how much currency is even out there, how many cards are even on the table to play with. So I want to zoom out for a second. You've been told that meritocracy, right, runs the world. And I just did a podcast episode on this, explaining kind of how that isn't the case. If you work hard, you win, right? That's been proven, that saying, to kind of be not really true in the modern times, especially. History shows that it always cycles. It's always liquidity. Have you heard of the Dutch tulip mania?
Yes.
Have you ever watched it? Yeah, most people aren't familiar with that, but I'll try and break that down. I have the details, so I can back you up. But
yeah, it's been a long time since I read the book. I believe it's a random walk down Wall Street that I read the story from. As far as I understand it, it was tulips were either imported or grown in a certain area. What country was it again? You just said it was Dutch. Anyways, they were either imported or grown.
Hundreds.
Yeah, they were either imported or grown in this certain area, geographical area. And basically because they were like different colors or something like that, like people were told they were worth more. And the price kind of artificially got pumped. And so basically the value of this tulip was really only what other people were saying it was valued at. The inherent value of the tulip didn't really go up until you got to a point where people were paying ridiculous amounts for this flower. And then it crashed and people lost a lot of money. I probably butchered that, but that's as far as I remember.
That's the standard I would say take, and you did pretty good job. Basically, the impact of it was there were a lot of financial restrictions because the market was crazy back then in Northern Europe, and so they basically said like we're kind of like limiting the opportunity for people to invest, in traditional, they can't like buy a stock back then like on Robinhood like you could today. So royalty started wearing tulips, which was obviously a kind of a rare flower in that area. They didn't last very long. And basically it got to a point where everyone wanted to wear tulips because it was the equivalent of like having a nice watch, right? Or, just having the NFT, right, back in the day. And so people wanted to cash in on that. And then other people realized that, hey, there's actually a market for tulips. I can not necessarily buy the tulip. And this is where futures trading and the concept of buying and selling futures exists because of this. People said that tulip season is coming up. So what if instead of selling the actual tulip, I sell the certificate that is good for a tulip when tulip season comes back around? And then people realize that there's a market, tulips aside, to just buy and sell these certificates for more or less money. And so it was fueled by easy credit, right? Because tulips were just going to keep coming and coming, right? Like you don't know how many tulips there's going to be. And then eventually, like when the credit was pulled, it collapsed because most people realized that there was nothing really backing a lot of these like transactions. They're just made out of thin air. And it's just like this haze, kind of this, fake transactions flying around all over. And when it actually came down to people saying, do we even have the tulips to back these? They're like, no, the supply is not even there for it. And so a lot of them were worthless anyway. But the importance was it arose the concept of like trading a piece of paper, a document, like an option contract, a future, and basically holding an asset that wasn't physical anymore, right? So you weren't just buying grain, you were buying the right to grain. That's important because that's how most financial transactions work now. You're not like most of the money isn't even physical. There's not the actual cash in the bank to back it up, or the gold, which is probably a huge reason why inflation's so crazy now. We don't have the gold standard. Next topic is the dot-com boom. So NASDAQ rose 400% in 5 years. Imagine if your Apple stock quadrupled, not even like 40%, 400%. Like you quadrupled your money in 5 years, fueled by the rate cuts, right? And irrational liquidity. Collapsed in 2000, right? When Greenspan tightened. And that they finally realized that like there's nothing to back it. I watched this podcast myself the other day. That was interesting. There's 3 stages of capitalism, essentially. The first phase is production, and that's how countries and empires rise and fall. You have a certain group of workers in a country that say, hey, we need to put up steel mills, we need to build buildings. There's an actual physical industry of growing goods and services. Then people start to realize I could start a business and make 2% on my money each year, or I can make 5% by investing in someone else's business. And then eventually you get to the point where most people start trading the market instead of just buying and starting businesses on their own. And so the actual industry is slowed down because everyone doesn't want to work. They just want to put their money in things that are working. And then it ends up leading to the third stage, which is monopolies, because the only companies left, that are worth doing own all the market share. Otherwise, there's no profit because there's not adequate competition, and you get way better returns on the stock market anyway because everyone's just pumping the market with this government money that's coming out. And so there's not enough work being done to justify the amount of money that exists. And that overvalues the currency. And a lot of times you have a collapse, like in all of these eras I just mentioned. Initially, the crypto and NFT era was the same. And so this is going to lead up to the discussion of today. All this was kind of building for a purpose, but NFTs boomed with, I would say, like Dogecoin first existed, Shiba Inu, all those like random Pepe meme coins started to exist back then in 2020. You had free money. It was literally free money. The government was handing out stimulus checks to people to stay at home. $69,000 was the price of Bitcoin back then, from like 14,000. $40 billion of JPEG pictures of monkeys. It collapsed when Jerome Powell eventually hiked 500 basis points in 18 months. He raised the rates tremendously to say, we have to slow down. This was way too much money flowing out. It was the fastest tightening and cinching of the market since Volcker in the 80s. Wealth, essentially, the point is, never disappears though. Once it's out, it's out. You can't take it back. It just moves rooms. And the problem most people have with trickle-down economics is most of the time it just stays at the top. It doesn't actually move to the lower rooms of the common everyday person. From the informed to the ignorant, from the patient to the panicked, right? It just goes back and forth. And a lot of times it flows back up to the people that have it already. And here's what should scare you. The next transfer, the one starting maybe tomorrow, may be the last one humans can play. That's my side point that I'm also going to prove to you, because AI is eating the inefficiencies in the market. Once machines can optimize the flow of capital and price stocks based on movements in real time, you won't get the same human-driven bust boom, right, that you used to have. And so nobody can make it on the stock market anymore. Let me think about how I want to word this. If AI can come into your company, find out exactly how much work is being done, know the exact numbers in real time, and almost literally see on the cameras the work being done to produce value, and therefore price your stock based on that, how do you think the opportunity is going to change for everyday people trying to, find undervalued opportunities to invest in and to make money?
Well, there would essentially be no undervalued, also no overvalued investments. Maybe there'd be overvalued depending on if certain corporations wanted to be greedy and just charge more, even though they know exactly what their valuation would be. But if you have something that can tangibly prove that your company should be valued at X amount of dollars based on industry averages or whatever it is they'll choose to base it off, it sounds to me like that opportunity is gone. There's going to be no more figuring out based off forward PE ratio what a stock should be valued at. It's just going to be, if AI can tell you exactly what it's worth, that's exactly what they're going to charge, or more. So if anything, you'd be trying to figure out if this is like a decent deal, not a good one anymore, or if this is a bad deal, because it's going to be overvalued.
Well, then how do you put $500 in like the boomers did and turn it into 60 grand, like in our generation?
Well,
how do you find those massive opportunities?
I think it's going to switch into what people put money into. It's going to have to switch from, you said earlier that people didn't want to work, and instead it makes more sense, honestly, to invest in the market when you can just invest in the labor and hours. and risk of a company instead of just taking that risk yourself. But it might just have to be that we start taking risks on our own now.
So there's two opportunities. There's two ways this goes. And I showed you the three phases, right? People actually work, and then people get lazy because other people are working. They don't want to work. And I'd rather just invest in those people. And then there's not enough work being done. So the only companies that are actually working go and buy up all the other ones, get a monopoly, and then their companies get all the money and are overpriced, and eventually the system collapses. That's basically, we're in the late stage capitalist era right now. And so eventually it gets to a point where everyone's just buying Apple stock or the S&P and no other companies, because Apple's just going to buy any other tech company up anyway, right? It gets to that point. And so your options are, the opportunity is going to be gone from the stock market because you're not going to have these new companies coming in to compete with new outside investment and things like that. It's not going to exist as much. And so you can't get as rich as your parents could investing in the stock market and actually hitting that American dream of retirement. Or you have to find new opportunities. And most likely when the system collapses and it has a reset, like we're very close to another 2008. What you're going to see is high volatility, high instability, and most people that are in the markets themselves are going to lose a lot. They're going to lose a lot when this falls in on itself. And so you need to be chasing the right opportunities. We're in that late 1920s era, right? Where it's like anything could make you money, it seems now. You put your money in and you don't really have to think too much about the stock market until the day you do. And that's the day you don't want to have your money in. And we're getting very, very close to that point. This cycle's not going to be enough. It's the projects that win this time and the ones that actually remain, that actually generate value, are very few and far in between. They have to have a doctrine. They have to have networks, infrastructure. They have to have capital pools. Better yet, invest in things that aren't even in the stock market, which is the perfect opportunity to talk about Altura. It's not a meme. It's a movement, right? I want to get specific for a second. You have Bored Apes. You have Pudgy Penguins. You might have heard of those NFT projects where you can invest $200 and now they're worth tens of thousands or hundreds of thousands of dollars. They were fun, right? There were memes. You could set them as your profile picture. Somebody would comment, "Hey, I stole your NFT by screenshotting it." Nobody knew what they were doing. It was fun, right? It's coming back. Everything is in waves. And that was just the first cultural casino. But the problem with that phase was memes only work when liquidity is blind, when there's so much liquidity flowing in. The reason the NFT market stopped is because the whole market stopped. Like the money stopped and it got tight and families couldn't go out and buy houses. So nobody's thinking about buying a picture of a monkey, right? Until that opportunity comes back. When money is free, dumb bets win. And we're looking at the opportunity now where money is starting to get cheaper. So Anthony, what do you think, other than these meme communities that I just mentioned, that people could look up, they might have heard of, what do you think separates Altura from these communities? And what do you think is the biggest difference in terms of valuation that we have?
What separates Altura, I'll answer the first part first, is I think the difference in its intent or its purpose. Meme coins, meme communities, NFT communities that are, like we saw it was like a hand-drawn picture of a clown the other day we were talking about, looking at in our raid night. But it's those exist for the purpose of one group or one person to make a lot of money and pull their way out and leave everybody else who they got on the hype train behind. That's a way for somebody to make Altura. It's like founded upon the actual intended use of an NFT beyond the monetary gain because of the increase in price of Ethereum and the value of having the NFT. It's designed to use the NFT as your ticket, your token to all that Altura has to offer, to receive crowdsourced funding for projects that you otherwise wouldn't have been able to fund yourself, to start your own business, to, as I said earlier, start taking your own risk instead of investing in the risk taken by other companies that eventually are going to get bought out and, as Caleb talked about, are going to be your only option. It's giving you access to tools to learn. It's giving you access to the networks Caleb was just talking about, giving you access to in-person meetups. It's more about starting, we keep calling it a movement, but I think that's a word that too many people use for people to really understand what that means in application. When we say movement, we don't just mean like it's a buzzword to call our community so that you are more apt to join. We're talking about an actual movement of people that are interested in protecting themselves and their families and their friends from the issues economically that we are discussing today. It's a movement of people that see opportunity when other people see fear or when other people see greed. And So that's the first part of your question. And to be honest, I don't remember what your second part of the question was.
Why should someone bet on this instead of chasing the next penguin?
Well, I think I kind of just answered that. I mean, if you're going to bet on something, like don't bet on a group or community that is faceless, that holds value only, just like the tulips, only in what is popular, that holds value because people say it's valuable. Bet on something that holds value because we're producing and we're helping people produce and we're doing things together. We're voting as a group to decide what's going to be the next idea that pops up in the market and is somewhat of a competitor to these monopolized companies. That's what you should bet on.
Where apes, Bored Apes gave you a cartoon, we gave you actual hard curriculum that would sell for hundreds of dollars or thousands of dollars on the market. Where Pudgy Penguins gave you plush toys in Walmart, that's another, opportunity they created. We're going to give you actual funding for your business. Infinitely more valuable. The ability to make your own money. Where meme coins gave you the dopamine rush from seeing it go up, even though you knew it was going to rug pull and go back down to zero. You were chasing dopamine. And in this case, we're giving you doctrine and an investment that will do the same exact growth, but it's not going to stop because we don't plan on just removing the liquidity and pulling the rug and going our separate ways. This is the early stages of what's going to be the equivalent of a digital Silicon Valley. We're talking about moving anywhere in the world and having people that are connected to our network getting funds for their business because they paid $200, right? How much money would you have to put up to start a business if you were, trying to do a media company or an ad agency and trying to run ads and network with your first people? You know the amount of time or resources you'd have to put in for that versus now join a community and get access to that, get access to the people to start that with. And that is why someone should bet on this, because meme coins are inevitably going to hit the point where people realize there's nothing holding up the bottom other than the fact that this is funny. And when the joke dies out, the meme dies out, the price dies out. And in this case, the value continues to back this and it grows infinitely. And so you make all of the upside and get all of the benefit on the way there. So that's my answer. The part most people I think don't want to face is that they think they have like forever. A lot of times they think that like meme coins are going to exist forever, that they can just wait and they can, wait it out a little bit, see if the opportunity comes back. The people that take risks, the smart calculated risks, that you could lose money, right? You could give us $200, but you also might have done that on a pair of Jordans. And in this case, you at least know you're getting something for it that's going to help you succeed. In other cases, that might just be thrown away into a meme coin. And people think that these opportunities, like what we're starting, gets to stay around forever. We have 8,000 tokens. By the time we have 250,000 followers, you won't have the opportunity to buy it for $200. You might be able to buy it for $200,000 like a CryptoPunk, but the window's short to get a decent price that's even in your realm of affordability. If Powell pivots tomorrow, risk assets are going to rip in the next 12 to 18 months. The altcoins, the crypto, Ethereum is probably going to pass $5,000. That's the window. And after that, it's AI rewriting the game and kicking you out of the market. So if you're not taking an opportunity like this, where you then have access to startups that people are making in here that you don't get to hear about on the outside, liquidity is going to die. The wealth transfer is going to end. And all of the videos of 19-year-olds getting rich are going to stop probably pretty soon. This isn't another bull run. This is the last one that looks human, in my opinion. If you miss it, you're going to regret it for probably the rest of your life, because we're going to get a lot of hate comments, I'm sure, of saying, oh, NFTs don't exist. Well, that's exactly the perfect time to invest in it. Your kids are going to grow up asking what you did in 2024, 2025. Most of you are going to say, I watched, I scrolled, and I hesitated. But Altura is the opposite of hesitation. It's a real life practice of manifestation, burning the boats. And Anthony, I'm going to let you ride for a minute and talk about the process of manifestation and what you know about it and how key it is in the way we're playing it with this project. Why it's not just like us wording it as like an extra benefit, but why this is a real example of manifestation.
So let's talk about what manifestation is first. Manifestation is beyond this woo-woo kind of connotation that people give it. The word itself. Manifestation in true implementation looks like giving your success no other option but to become your reality, because you believe so firmly, so deeply that is already the reality you live in. If that doesn't make sense, I'll give you an example. Let's me building my personal brand in fitness, in the fitness industry. Months ago, I would wake up, think to myself, what should I post today? Go make a video, post it, and just hope that by posting once or twice a day, I'd have one that blows up and, maybe I can get popular that way. Maybe people will start to know my name. I can get a sponsorship. Cool. But that was the only thought I put into it. Didn't think about it outside of when I was posting, didn't think about it outside of the gym. Let me fast forward to today. Largely through Caleb's influence, I've figured out that if I actually want what it is I say I want to achieve to become my reality, I need to act like that's already how I live by manifesting the thoughts to myself every day that I'm so grateful to have woken up today and seen all this money in my account because of clients I had through coaching, or I am so grateful that this one video reached 15 million people because that's exactly the video I wanted to spread my message to the world. If I truly believed in my mind that that was what I was seeing as a result of my work every single day, I would be so much more driven to actually go out and do that work and make it the best quality work I possibly could. By doing those things consistently, eventually you get to a point where that actually is in real life. And it's not just you thinking that to yourself anymore. That actually is what's happening because you've been acting that way for so long. It's inevitable. It has to happen. If you believe so wholeheartedly that you are already successful, that you have achieve whatever goal it is you have achieved. That you've started that business and you've done so well successfully, and your actions reflect what a person who is successful in that endeavor does day to day, hour by hour, that will become your reality. I'll give you, and this is going to be kind of another example, but I'm going to get into the second part of your question, which was, how does this apply to what we're doing here at Altura? Well, I'll tell you, like this office I'm in is like another room in my house. All this money I've spent on equipment to film for you guys to be on the stream, all the money and time Caleb's put into getting these streams together for you. He does something live every single day of the week, working a job on top of that, working in real estate deals on top of that, working other projects on top of that, keeping himself in the gym on top of that, sleeping. I don't even know how long he sleeps every night. He sends me texts at like 1 a.m. because he's grinding while I'm asleep with my wife. He already acts and I already act like the whitelist sold out. We already act like all 8,000 of the NFTs are already owned by 8,000 individuals. Like we already meet up in real world to discuss ideas, to discuss the next thing to invest in. Like we already are this syndicate of people that are like-minded, that refuse to allow themselves to be monopolized, that refuse to be for sale, are determined, take a leap of faith and put some confidence and some money and some time into their own ideas and to grow and to help others do the same. And because Caleb and I already act in accordance with what Altura is to be, Altura has no option but to become that syndicate that we described to you. And in a lot of ways, it already is. I mean, we're not even lying when we say that's what Altura is. It's just that without the belief of all of the people that are to join, that haven't joined yet, the people we're talking to right now, it can't be to its fullest extent. Be that what it may, we already are acting in accordance with this being the next revolution, the thing that changes how people view what it looks like to be crowdfunded, what it looks like to start a business, and what it looks like to be a part of a group of people that thinks in this same line of thinking. And so therefore it has to happen. And that's what manifestation really comes down to. Wholeheartedly believing you already are that version of you that's successful, acting in accordance with what that successful person does, compiling the results of your actions until that becomes your reality.
And if you like doubt that manifestation doesn't work, well, let me ask you this. If I go out and act as if everything is already successful, like there's plenty of days where I could have just said, I want to go get a Coke and some ice cream and sit on the couch instead of like looking at our ads. And October 1st is too tight to make this happen. It wouldn't happen. And it's like the fact that I'm doing these things and basically preparing myself to receive you guys in and have a successful community and project and make these things that I'm talking about actually a reality. That's why most, venture capital firms look at the founder and not the actual, idea, because you need the person that is going to go out there and say, I don't really know how I'm going to do it yet. It's just going to happen. And we're going to find a way to make it work. And let me ask you this. If you don't believe manifestation works, are you going to join the project of the guy that's like, I'm probably am staying up to like, midnight or 1 a.m. to work on this and getting up at like 7 a.m. and just grinding this all night, and I'm acting in the belief that this is already here and working? Or would you join it if the guy was like, visible once or twice a week? You wouldn't join it unless I was active. And therefore me acting in accordance with that belief, as you hear in like religion all the time, actually makes it more likely to occur because people see that. And so although I'm partially convincing myself to do it, the universe is kind of reflecting that by people saying, damn, they're serious about this. And so of course you're going to see more results. It's kind of just the guaranteed formula. But, people are very good bullshit detectors. And if I didn't actually believe that and I wasn't actually trying that many hours a day to do it, people would pick up on that pretty quickly. It would look half-assed. And I've done too many things half-assed in my life before I joined the military to not do that anymore. If you guys are hearing this now, you're early. Like, you are pre-whitelist. And again, you know how dedicated we are to doing this. Look at the founder, don't look at the idea. The idea gets to be something that you help create. We've already laid out the roadmap and what we want to do minimally at this point. And it's so impressive compared to what all these 50 Ethereum NFTs are selling for in those communities. So read up on the white paper and see how this is different. But then again, also understand that you have a role in growing this too. Your belief adds onto my belief and Anthony's belief and everyone out here, and that's what catches fire. What would the American Revolution look like if do you think if people didn't believe that they actually had a chance of beating the British?
I mean, it wouldn't have happened. I mean, we probably would have been still under British rule, or maybe by somebody else's rule by now.
Yeah, they would have like beheaded George Washington in the square a week later because nobody would have had his back. People wouldn't have said, "Hey, that guy's worth following." So what do you? Let me ask that I'll ask that to you, but first I'm going to ask it rhetorically to everybody. What areas of your life do you know you have a little bit more effort to give? That that's what made Kobe Bryant great, is those 10 extra reps each day. You're cutting yourself short because something inside you says, if I don't try 100%, then I have an excuse to write it off as it just being a bad idea when it doesn't work. Versus I gave it everything I had. And therefore, that's actually that 10% that I thought didn't mean anything is actually what made it the case. That's the most important 10%, is the one that feels the most painful at the end because you actually believe in it. How many things, I know the gym's a huge example of that, but I don't know where else you can see it come across as relevant.
Yeah, I mean, you bring up the gym, and I want to make this a two-parter, but if you know anything about muscle mechanics, in hypertrophy training. So basically the process by which your muscles grow back bigger and stronger because of your training. You know that the first, like if you're going to do a set of 10 on bicep curls, your first 8 reps, which on paper looks like 80% of the work, actually are probably responsible for like maybe 15 to 20%. And I'm probably butchering these numbers. But the point is, like, the first 8 reps are responsible for nearly none of the gains you're to be had from doing that set. The last 2, the last 20%, the last 10%, whatever it looks like, numbers are arbitrary, are actually where the micro tears get put in the fibers, and in turn, where hypertrophy happens, where you come back bigger and stronger. So if you want to apply that to what we're saying here, that last 10% that you're slacking on is probably all you actually needed in order for your idea to come to fruition. And the thing I want to harp on more is not even about that last 10%, but this idea, this phenomenon that whoever is in charge of our world, whoever is in charge of wherever it is we live individually, our countries, maybe it's the organizations that are keeping us, our only option is to invest in the monopoly. They've done such a good job at convincing you, me, everybody, that it's too far out of your reach to be doing something great, to be starting something on your own. It's too far out of your reach to make a ton of money off of this new AI application that you came up with, because it requires, you go get funding for it. It requires you to have somebody build you a website. It requires all of this work that you probably don't even know, like the majority of the work it's going to require for you to get that done. But they've done such a good job at convincing us that everything that we dream of doing and accomplishing is too far out of your reach, and that you should just be satisfied with what you're doing right now. And that's the bigger thing for me, because I don't find it difficult for me to like put well, sometimes I do. I guess what I should say is I think a large reason that we don't put that last 10 to 20% of effort into everything we do is because we're holding on to this idea of like, well, what if it doesn't work? You know what I mean? And that stems from something in you still finds it not possible, not attainable for you to do the thing you say you want to do. And that's part of it
most of the time.
Yeah, it's an excuse, but it's exactly what it is. That's been the thing that holds me back the most in developing my personal brand, in working with Altura, in even my personal goals. It's been, there's always this slight, well, it might not work out, so I actually just stopped doing things I was doing to like prepare in case my main plan doesn't work, because that's the concept of burning the boats. If you make it impossible for you to lean against anything else, you're going to succeed. And so, like, for me, that looked like this. This is not financial advice, but I like liquidated my retirement accounts at 23 years old. Supposedly the time where, you had the most amount of time to grow, to let them sit and grow. But I thought to myself, and I said to myself, that this money is better serving me right now if I use it to pursue my goals and to get done the things I need to do in an effort to achieve those goals. So that to me was like a burning of the bridges moment. And because I have no other alternative.
Well, I'll fill in for you for a second while you hop in, but oh, you are back. Okay.
Is this better?
Yeah. Yep.
Yeah. What did it cut off? What was the last thing you heard me say?
You liquidated your retirement?
Yeah. I mean, it was just that to me was burning of the bridges. That to me was saying, I'm tired of thinking to myself, well, this will help me. This will be my cushion if anything else fails, if I fail. I quit saying that to myself. I said, I'm going to use this money to make sure that what I'm trying to achieve right now gets done, that it happens. And so I left myself with no other option. And that's what I wanted to talk about more, is that it's easy to be like, okay, I'll just give more effort. But I think you need to first get rid of the thing that's causing you not to put the effort.
Nice.
Self-doubt, an excuse, whatever it is.
Yeah, you gotta untie the weight, around your ankle before you can run as fast as you want to. It's just sometimes, again, is winning is just not losing half the time, honestly. And there's so many ways to lose and get distracted nowadays. I think distraction is the biggest weapon being used against you to even, because distraction, right? And your self-doubt is what's actually the biggest thing helping, not even helping hold you back, but helping other people win. Because the longer it takes you to overcome your self-doubt and actually start a business, the more money you'll spend on other people's businesses that have already achieved success. And they want you to stay stuck in self-doubt. It's a you versus them game, and they're kicking your ass right now the longer you fight this battle. And so I mentioned the other bubbles before, right? And I will bet every single cent I have, I'll live in a box if I'm wrong about this. But every 100 years, right? We had the Great Depression in the 30s. We're going to be in a set of very hard times in the next 5 to 10 years. Could be in a war for all we know, but I think it's going to be at least a financial collapse, because I think it's going to be, we'll probably call it the AI bubble, because what's happening right now is any company that exists is getting insane funding. If you just slap on that you're an AI powered startup, that you're leveraging AI in some way, because so many people don't understand it. And it's just all the money's going to these companies that really have no, back to stage one of capitalism, right? There's no actual people cranking the knobs and producing the output. The AI is, but it's not as valuable as what they're charging for it. And so this bubble that has spurred economic growth amidst like a hard recession is going to collapse. And although we might lower rates and stuff, it's going to be very hard in the next 5 to 10 years. You might be lucky in the next couple months, if you buy other NFT projects, if you buy altcoins like Ethereum and stuff, because of the short-term growth, if we do get lower rates tomorrow. But it's going to collapse very soon. It is. And that's my personal bet. And so when everyone's scrambling and stocks are just dropping, you're going to be glad you had your money out and in something that is backed by stage one capitalism, not stage two of everyone just trying to throw it in the stock market because it's going to grow, right? But in this case, it won't. So you have to go back to primitive era, right, of finding who is actually valuable and then reassessing the value of the market at an adequate rate. But again, if AI is coming in to do that and taking the opportunity, you're going to lose all the money in the second to third stage of capitalism, and you're not going to have the opportunity you had to get it up to that point, right? So you're just going to end up taking a massive L unless you invested it in something that you got to play a role in building, which was Altura, which was the businesses you got funding to start out of it that's now producing money, where you don't have to put all your eggs in the stock market. And you make your own success because you're not betting on other people and just throwing it on a train that's about to run into the wall pretty soon or off the cliff. You're putting it into you. And that is probably the best, most controllable outcome you have in a very uncertain world now. Traffic is coming into our project. The whitelist will close. You're not going to be able to buy it for a few $100. It might be a few $1,000 or $100,000 in the future. Once it's gone, it's gone, guys. And again, you don't just get the opportunity like picking another stock in this case. And when the stocks are gone, you're going to have absolutely nothing. This is the last wealth transfer. This is the last shot at sovereignty before machines really do limit your opportunity. And you're going to wish you had some damn connections to the market that knew the market and could provide those opportunities, which is going to come inside of Altura in the startups that we're going to fund. The businesses your friends are creating that you can create massive opportunity to invest in and help them succeed. And they'll come back and make you money. This is not a bull run, right? This is a wealth transfer. As I've said so many times before, AI closes the window. What do you think most people, this was probably gonna be my last question. What do you think most people are gonna regret looking at this massive overinflated bubble of, money printing and inflation that we're seeing when it collapses 5-10 years out from now? Do you think it's gonna be missing the opportunity to grow money and preserve it, or do you think it's going to be missing the actual utility that came out of it, missing the good that of being able to go out and have opportunity in general? Do you know what I'm saying? So it's either, do you think people are going to miss the fact that they're making money, or miss the startups and the way society is progressing because of a good market? Which one's going to hit harder?
I think initially, and probably for a certain echelon, up to a certain echelon of understanding in society, it's going to be the opportunity to make money. Small-minded, I don't even want to say small-minded, because it's not that they're small-minded. It's more like, it's not that they're small-minded as much as it is limited in knowledge of how the issue is not necessarily in the short term money to be made. The issue if you're thinking long term, should be opportunity. So I think initially most everybody's going to regret and wish we could go back to the opportunity to make money as easily as it exists today. You know, I know it's hard to hear for a lot of people that work hard and don't make a lot of money, but I think then it's gonna stay as that being the regret for up to a certain echelon of understanding. But the people in the higher echelons of understanding are gonna regret not being a part of the opportunities instead of the money.
Who got the bailouts in 2008 after the collapse? Who did the money go to?
The banks.
The people that control what I said was the casino managers. They control when somebody's running the table at the casino, they're the ones that are going to step in and say, we're done here. You're done playing. It seems unfair, but 2008 was unfair. And that was a real actual billions or even trillions of dollars of impact from that. If you are on the wrong side, if you're not on the winner's side, which most of you aren't, because we're trying to make money and we're trying to escape this broken system, you are going to be the one that is getting liquidated when Robinhood freezes your account, or when the stock market says you can't buy or sell this. That happened with GameStop, right? The GameStop and the rich funds that were trying to preserve their wealth, they shut off the sell button and the buy button temporarily, I believe, for GameStop. Like, you couldn't even like trade it. And that gave just enough window for these companies to liquidate. And they basically, other people came in and I think they bought, but they couldn't sell. And so all this influx of money allowed the hedge funds to cash out and not lose all their money. So they basically just robbed people because they could control Robinhood, who can control people's ability to buy and sell. They're not going to care if you lose $10,000, which was your entire savings. They're going to care that the mutual fund with impact on the greater market survives. And so you need a circle, you need a network, not just the opportunity of people that will care about you. And when you're going through difficult times, when the market cinches, right, and you're not inside Altura, you're not going to have the people there to say, how do I pivot? How do I find a way to restructure this program so I can still make money, given this niche is changing, things like that. And those people are going to be inside our community making it happen. You're still going to be trying to ask ChatGPT, and it's going to be too busy telling you it really doesn't give a fuck at the end of the day. This isn't, again, it's not a bull run. This is your last chance. And I want you to take it seriously. I want it to sound serious because I genuinely don't know how much more time there is, because we've seen a 100-year cycle of downfalls. And like the 1930s started the Depression. We're in 2025 and it's the same thing going on right now. So I want you to ask yourself and use that critical thinking to say, how much time is there to make money before you have to find something else? And all you're going to see when times are hard is the Times Square ad saying that this group called Altura is still funding businesses and somehow surviving when everyone else is going back to this even harder state that we're living in now. So I want to leave you with this. And this is my final, I guess, message to everybody listening. Wealth, like we said, is inputted into the economy tomorrow, maybe when the Fed lowers rates, hopefully. It doesn't vanish. It just transfers. The Fed decides where it flows. It's not the most fair system, but somebody's got to do it. Tomorrow, the cycle resets. This isn't motivation. This isn't hype. This is just mechanics. The history shows this, right? Liquidity shows this, and doctrine all shows these patterns. Altura is the rival society built for this moment and built to survive any of these massive moves, which seem to be happening more and more. We're not a meme. We're not a cartoon, so we're not going to just rug pull to zero, because there's actual value and investments happening underneath that. This is a 1000x opportunity. This is the next NVIDIA opportunity for a lot of you. This is a doctrine. And right now, you guys are still early. So go to www.altura, A-L-T-U-R-A, society.com, alturasociety.com. That's it. Join the free community while it's still open, and it will go private soon. Once we start selling these, you're not going to get the actual investment opportunities. You're not going to get 1000x potential. I promise you, a lot of you will have the opportunity to 100x or 1000x your money with some of these opportunities getting put out. I'm not going to tell you what they are yet. Read the white paper. And when it does, you'll wish you burned your boat sooner, because that's the only thing that proves who cares and who doesn't. Altura is a perfect example of manifestation and having belief in something bigger than yourself in a world that it's harder and harder to do so. Final words from Anthony. Give me 3 words that you think best encompass the message here tonight.
Prepare. There's word 1. Understand. And I'll say act. Do something about it.
I didn't even think of mine. I should probably think of mine. I would say contemplate, because you're gonna need to think about it. This is a big decision you're about to make, which ties into the second one, which is I would also like to say jump. Like, literally jump go jump off the 30-foot cliff into the ocean and take the risk on the exhilarating rush of trying something new, as scary as it is, because it's worth it. And then the third one would be trust in what we're doing here, trust in yourself that you found the right podcast, that you're making the right move. Join our community. You're early. That means you don't have to put money on the table today. Nobody's paying anything yet. So just find out if this is a good opportunity for you or not. History's not going to wait, though. Liquidity's not going to wait, and wealth will certainly not wait. You guys can make a few bucks tomorrow, maybe off trading it and stuff. I would invest in something that's bigger and going to transform your life in a more significant way. The Fed's about to pull the trigger, so my question is, are you positioned, or are you just in the casino still playing? This has been the Ascended Podcast. I hope all of you have a great rest of your Tuesday night, and we'll see you inside the community. Link's going to be attached down below.
Take care, everybody.
Take
Appreciate
care.
your time.